The freeze hit at 3:17 p.m. on a Tuesday. Traders on the Sao Paulo exchange didn't see it coming, not the way it unfolded. One moment, Americanas stock was trading at $12.10. The next, it was $6.75, then $3.40. Circuit breakers failed. Phones melted down. Clients screamed into headsets that their positions were disappearing. And then the court order dropped. On screen in bold red letters, $54 billion frozen. A drone shot of Sao Paulo's skyline at dawn, hundreds of glass towers catching the first light. The camera plunges into the heart of the city, past Avenida Faria Lima, past Itaú's black monolith, until it slams into the Americanas headquarters in Alphaville. The building goes dark. A single red banner flashes across its facade. BLOQEIO Judicial. The freeze wasn't just about shares, it was about everything. Brazilian federal judges ordered the seizure of $54 billion in assets, cash, real estate, stakes in other companies linked to former Americanas executives and their networks. The court wasn't trying to save the retailer. It was trying to stop the bleeding, because what they found wasn't just bad accounting. It was a ledger so twisted, even the auditors never saw the cracks. A single entry caught investigators' eyes, CUS 5, no explanation, no backup. Just 5 letters and a number. That one line triggered a forensic dive into a labyrinth of shell companies, offshore accounts, and fake invoices stretching from Sao Paulo to the Cayman Islands. And it all started with a man named Ronaldo Ayabrudi. A split screen appears. Left side, the trading floor of B3, Brazil's stock exchange. Brokers in open-collar shirts shout into phones, screens flashing red. Right side, a courtroom in Brasilia. Judge Waldemar Claudio de Carvalho slams a gavel. The gavel echo cuts through the chaos. Ayabrudi wasn't just a CFO. He was the architect of a financial mirage. For years, Americanas reported profits that didn't exist. They booked future revenue as current income. They inflated sales with fake suppliers. They moved money through empty shell companies in tax havens where no employees worked, no products were sold, just numbers moved across digital ledgers. And the auditors? They signed off every year. On screen, a cascade of red flags. $0.1 billion in supplier credits booked as revenue, but no invoices existed. $0.8 billion in loans labeled as operational cash, masking debt. $4.3 billion in fictitious sales to fake entities in Panama and the Caymans. Every one of these entries was stamped audited by PwC. Zoom in on a ledger page. A single line glows. CUS 5 $472 million. That entry alone. It was enough to tip the balance. Investigators traced it back to a shell company called Global Trade Solutions Limited. Incorporated in the British Virgin Islands in 2018. No website, no employees, just a postal box in Tortola, and behind it, Ronaldo Ayabrudi's signature. The screen flickers. A timeline unfolds in reverse. 2023, 2022, 2021, 2020. Each year, Americanas' reported profit grows, while its cash flow collapses. By 2023, the company claimed $0.9 billion in net income. Reality, a $4.3 billion cash deficit. That's when the court acted. On March 12, 2024, a federal judge froze $54 billion, nearly half the company's reported assets. The goal: preserve value for creditors before the fraud unraveled completely. But here's the question no one can answer yet. How did $11 billion asset freeze expose a fraud so vast, even the people paid to find it missed it? Zoom out from the courthouse steps. A crowd of reporters shoves microphones toward a suited man, Sergio Rial, former CEO of Americanas. His face is drawn. He doesn't speak. He can't, because Rial was the one who signed the 2022 annual report. The one that said everything was fine. Cut to an aerial shot of Americanas' flagship store in Barra de Tijuca. The sign flickers. The doors are locked. Inside, creditors are already inventorying shelves. A woman in a yellow vest walks past, carrying a cardboard box. She pauses, looks up at the logo, shakes her head. This isn't just a company failing. This is a market wound. The freeze wasn't the end. It was the beginning. Because behind every frozen asset, every shell company, every fake invoice, there's a trail, and someone left a door unlocked. Now investigators are going through it, and they're not stopping at Ronaldo Ayabrudi. They're going higher. Source, Reuters, March 12, 2024. Brazilian federal judges ordered the freezing of roughly $54 billion in assets linked to former Americanas executives and their associated companies amid a massive accounting fraud investigation. Source, Bloomberg, March 12, 2024. The court's decision targets cash, real estate, and stakes in other businesses, aiming to preserve the value for creditors as the fraud case against the retailer unfolds. Source, Valor Economico, March 12, 2024. Federal justice authorized the seizure of assets totaling $54 billion, including properties, vehicles, and corporate stakes, from executives and controllers suspected in the Americanas fraud. Source, Folha UOL, Paulo, March 13, 2024. The seizure was decreed after discovery of accounting irregularities that artificially inflated Americanas' reported profits in recent years. Warning: content presented is for educational and investigative purposes only. No financial or legal advice is intended. The screen fades in from black to a dimly lit cubicle. A woman in her 30s, Maria, stares at a spreadsheet. Columns of numbers blur as she squints, her fingers trembling over the keyboard. Narration. Maria was just another mid-level accountant at Americanas. One Friday night in late 2021, she found something that didn't add up. Not by a few thousand, not by a few million. Source, Reuters. Source, Folha UOL, Paulo. Her cursor hovered over a line labeled supplier debt, non-trade payables. $54 billion. A number so large it dwarfed the company's entire revenue. She dug deeper. The suppliers didn't exist. Maria's face tightens. She types fast, her breath shallow. Narration. Maria sent an email, one line, no subject. This isn't a mistake, it's fraud. The camera pushes in on the sent folder. Timestamp, 2:47 a.m. No reply came, cut to 2015. A boardroom in Sao Paulo, dark wood, glass walls, a view of the city's skyline. Narration. 6 years earlier, Americanas' top brass approved a project called Neptune. They called it restructuring. The courts call it fraud. Source, Valor Economico. Project Neptune wasn't about saving the company. It was a shell game. Aerial drone shot a glass building in the Cayman Islands. No sign on the door, just a number, 17. Inside, a single server rack humming, a label Americanas only. This was the nerve center of the deception. Cut to a shadowy figure, an actor playing a hacker typing furiously. Screens flash green text. Narration. Every fake supplier, every forged invoice, every bogus transaction, they all flowed through here. No money moved, but the debt did, back to Maria. Now she's standing in a courtroom hallway flanked by lawyers, microphones in her face. Narration. Maria became the first whistleblower. She didn't know it then, but she just pulled the pin on a financial grenade. The judge's gavel slams. Assets frozen are $54 billion, cash, real estate, stakes in other companies. Source, Reuters. Source, Bloomberg. But the freeze wasn't justice. It was damage control. Aerial shot, a luxury penthouse in Sao Paulo's Jardins district. Glass walls, infinity pool. Narration. Among the frozen assets, a $12 million apartment registered to a shell company in Panama. The CEO's signature was on the incorporation papers. Cut to a marina, a yacht named Neptune's Revenge. Narration. Another asset, another layer of the onion. The question wasn't just how much, it was how deep the rot went. A court document flashes on screen. Red stamp, SECRETO judicial secret. Narration. The investigation is sealed. Officials won't name names. But the pattern is clear. A spreadsheet cell glows red. Supplier debt, non-trade payables, $54 billion. This wasn't an accident. This was years of coordinated fraud. Maria's email sits in a digital archive, unanswered. Narration. She tried to stop it. No one listened, until the numbers didn't lie. The trading floor of Rio de Janeiro's stock exchange erupts in chaos. Screens flash red. Traders fling papers into the air. Phones ring off the hook. Narration. This wasn't a market correction. It wasn't a crash. It was a reckoning. The court didn't freeze assets, it froze a lie. A lie built on $54 billion of cooked books, inflated profits, and hollow balance sheets. The order came down on March 12, 2024. Brazilian federal judges locked away cash, real estate, stakes in other companies, everything tied to former Americanas executives and their inner circle. Source: Reuters, Bloomberg. Narration: 54 billion reais? That's every real estate deal, every offshore account, every shell company they ever touched. And it was all sitting on a foundation of smoke. CEO steps down. CFO flees the country. $11 billion in debt revealed. The resignation hits live TV. The CFO's private jet is already wheels up. Creditors scramble. Employees stare at frozen paychecks. Narration: the court didn't just freeze assets, it froze a company. And what it unfroze was a corpse. Inside the courtroom, the judge's voice cuts through the noise. These assets are frozen to preserve value for creditors. But the value was never real. It was a ledger entry dressed in a suit. Reenactment: a whistleblower, face obscured, slides a USB drive across a table. On screen, a single email subject line burns in. The missing $54 billion. No grand conspiracy slides on a projector. No dramatic sting of a music cue, just a ledger, and one line that should have never existed. Slow motion, a single accounting entry. CUSDO de MERCADORA VENDIDA. You don't inflate profits by selling more. You inflate profits by not recording what you owe. Internal emails surface. Executives knew. Compliance teams warned. But the numbers kept climbing. Narration: for years, Americanas told investors it was profitable. The fraud didn't start with a bang. It started with a whisper and a missing line item. Then the freeze hit. And like a dam breaking, the truth poured out. Irregularities, inflated revenue, phantom profits. The court didn't just stop a crime, it exposed a system. A single ledger entry, a missing $54 billion, and 11 million people who trusted a brand that never existed. The stock exchange in ruins. The CEO gone. The CFO gone. The lie exposed. Narration: this wasn't just a financial collapse, it was a moral one. And the freeze order, that wasn't the end. It was the beginning of the fall. A global montage flashes across the screen. Trading screens on Wall Street darken as Brazilian ADRs halt. European regulators freeze accounts linked to the fraud. The camera lingers on a Reuters headline. Brazilian court freezes roughly $54 billion in assets linked to former Americanas executives and their associated companies amid a massive accounting fraud investigation. Source: Reuters. This wasn't just a Brazilian scandal, it was a global warning. Finance professor Dr. Helena Santos appears on screen, her voice measured but sharp. Source: Reuters. If auditors missed $54 billion in misstated liabilities, what else are they missing? Global accounting standards have a gaping hole. The word missing flashes in bold red. The narrator continues. $54 billion vanished, and the system that was supposed to catch it didn't. A data visualization shows the ripple effect. European banks unwind exposure. Pension funds in the U.S. revalue portfolios. The NYSE suspends trading in Americanas ADRs. Source: Bloomberg. Aerial shots of Sao Paulo's financial district, then cut to empty trading floors in London and New York. The narrator's tone shifts, urgent, forward-looking. The fraud exposed a systemic failure. Auditors, regulators, and investors all relied on the same flawed numbers. When the truth surfaced, markets convulsed. The freeze wasn't just about recovering assets. It was about restoring trust in a system built on transparency. The narrator leans in. Regulators worldwide are now asking the same question. How many more holes are out there? Investors are demanding stricter oversight. The Americanas case isn't over, but its warning is already here. A final line appears. The fraud didn't just steal billions, it stole confidence, and that's harder to reclaim.